A couple of great guests gave their opinions. There's been an awful lot of gobbledygook and marbles in the mouth when you talk to an awful lot of people about the S&L crisis, but they had some good opinions.
They truly did. They truly did. And it was nice to see somebody from Savings and Loan Association that it kind of represents a bunch of strong ones.
That's right. All right, listen, we've gone through all the gobbledygook. We've got some good hard information. We've done some philosophy. We've checked the facts. Now let's take a quick trip south in Manhattan to Wall Street to see if, in fact, amongst the confusion, as Paul Schosberg said, some very healthy S&Ls. As Bert Ely said, yeah, but some not so healthy S&Ls. Is there a dollar to be made as an investor? Let's cut through all this, and let's talk to an expert. His name is Henry Peltz. He is with Keefe, Bruyette & Woods. He's Vice President for Thrift Research. We have hit it right into the cheap seats on finding the exact right guest.
That's right.
Welcome, Henry.
Henry, nice to have you with us. Would Keefe, Bruyette & Woods recommend certain savings and loans as investments for people right now?
Yes. We have consistently recommended some S&Ls.
And
I was going to say it's pretty tough in light of some of the information we've just had from our two guests to dive into the fray.
Remember that they have indicated that only 1/3 of the industry is sick. The other 2/3 are from moderately healthy to very healthy.
It would seem to me if I was a healthy S&L with a fair amount of cash in my kicker that I've got a whole bunch of places I can go with that. But I have to be careful, don't I?
Absolutely.
Okay.
And so do investors. And that's the key.
I see a look of warning. I'm looking at this man's eyes here.
What would you tell investors to pay particular attention to in their analyzation of a savings and loan or a bank stock before purchase?
Well, it depends why people invest. I think one factor that's involved that people ought to recognize is that savings and loan stocks are volatile. They vary, their prices vary with interest rate movements.
Very interest rate sensitive.
Yes.
Yeah.
And they continue to be, although they are less sensitive now than they were some years ago. They fluctuate in relationship to housing activity, because that's basically how thrifts make their money.
Let's talk for a second, Henry, about that, if you would. Primary businesses of thrifts, right at the top. I think the reason why they were formed in the first place is to help the housing market.
Absolutely.
Lending mortgages. What else? All these banks didn't get into trouble by making mortgages to good people who made their mortgage payments.
Well, the problem is that under deregulation in 1980 and 1981, they were given the option of expanding their lending, going into commercial real estate, expanding in construction lending, which is more risky than the kinds of single-family home loans that they make, going into land development.
Well, it didn't take them long to get into trouble,
did they go?
Because Henry, your Henry, Bert Ely a while ago said by 1984, definitely 85, he could see that there were big problems there as someone who's a consultant to the industry. So what did it take them, 4 years, 3 years?
In some cases, even less than that. See, one of the problems is they had to put together people that knew how to make these sorts of loans, and some of them didn't do it. In New England, for example, there have been a number of savings and loans or savings banks that have gotten into very real trouble because they got into construction lending without anybody on staff that really knew how to make construction loans. By the same token, there are other thrifts. One of them, for example, is Home Fed of San Diego, that has been in the construction lending and the real estate development business for many years and has been consistently profitable.
It's done well.
Now,
so you can't generalize by saying.
You can't generalize. But there's another aspect of this. Home Fed, a few years ago, got into the credit card business. And they lost their shirts. So what you learn in one side of the business doesn't necessarily apply to another side.
Profits, Henry. You were grinding some numbers as we were doing a little dabbing here, a little makeup of our Wall Street. We don't want our Wall Street friends to know we have this stuff on. How does it look for the first quarter or two of 1989 as a group, Henry?
For the industry as a whole, the numbers are terrible. In the first quarter of the year, in the March quarter of the year, the industry as a whole lost $3.5 billion after all was said and done. And it increased to $3.9 billion in the second quarter of the year.
I don't know if I want to get into this business, Henry.
But remember that a lot of those losses came from a relatively small number of thrifts that are, to all intents and purposes, dead.
Out of business, yeah. And so John,
in the June quarter, even though the industry as a whole lost close to $4 billion, 2/3 of the industry was profitable. Unfortunately, the third that was unprofitable more than wiped out the profits of the profitable group.
All right, we're going to take a couple of questions. We have a very nice gentleman by the name of Robert who's been hanging on from Raleigh, North Carolina since the start of the show. Hi, Robert.
Yes.
Hi.
My question is, what is the potential gain from a particular, or the mutual funds that are coming out now that are in the Southeast? I'm really curious about these new mutual funds that are going to consist of 30 to 40 supposedly healthy savings and loans.
Okay, yeah, I saw that. I can't think of the name of the organization that's doing it right now.
Southeastern Savings Fund, something like that?
Exactly, and it is a mutual fund made up of savings and loans.
Yay,
I'll think
Wall
of the name.
Street. Package.
I'll think of the name in a minute. I just read it yesterday.
All right. Now, I think one of the prime motivating factors behind the formation of funds like this...
Johnson Lane. That's who's bringing
Johnson
it out.
Lane. Okay. One of the prime factors behind bringing out a fund like this is that a lot of people expect, as I do, that these thrifts, the healthy ones, the well-run ones, are going to be bought up by commercial banks or by other institutions. And if they are bought up, they will be bought up at a premium to current market price. That provides the profit potential for a fund which invests in a group of thrifts. It's something that an individual investor can do, but it's much more difficult. First of all, few individual investors have enough money to put together a package.
To diversify.
And the package is probably the best way to buy.
If I'm going to put my foot in the water, we've only got a minute left or so, Henry. I'm going to put my little pinky in the water in the S&L business for a stock. Can we pin you down for an idea or two?
Well,
or even a geographical area?
All right. I'd like to just start by saying a couple of general characteristics that you ought to look for. Number one, you want management.
Okay.
And the way you get management is you look at the earnings record. You want a company that's profitable.
Well said.
You want a company that does not have too much in the way of problem assets. You want a company that does not have too much in the way of goodwill, because right now that's a no-no.
Well said.
Okay. All right, now having said that, we have a number of stocks that we have been recommending to our institutional clients. We don't do a retail
Much
business.
retail.
Sure.
I'll give you some names.
If you just give us one or two, then we're going to have to...
All right, Great Lakes Bancorp in Ann Arbor, Michigan. Apple Bank here in New York. Union Fed in Los Angeles. San Francisco Fed. I'm not going to tell you where that's located.
I think we figured that
Henry,
one out.
thank you very much. As we do with the other two gentlemen, come on back again toward the end of the year, and let's take a peek at the future for 1990. Will you come back?
Will do.
Good deal. Speaking of back, we'll be back with Phones Across America in just a minute.